United Airlines, ticker symbol UAL, will be reporting earnings tomorrow, October 17, after market closes. And today, October 16, we detected some unusual options activity data and wanted our members to know ahead of time, since they get early access to these videos. That's one of the perks that they get for being part of our membership. And so if you are interested in joining, click the join button on our channel homepage. So without further ado, let's get into United Airlines. As you can see, United made a 52-week high of $58.23 back in July, and ever since then it has been on a downtrend. So when we take a look at the stock also, so we move back, you can see that it was on an uptrend prior. Actually, in fact, back here on this day, June 9, we actually analyzed some data on unusual options activity and published this that was very accurate. And we took profits on this day here. This was June 28, and that was over 300%. It was these videos here. So if you are interested in learning more on how we trade based on this data, you can find these videos still available. This one is here. This is the title here. And this one here where we made 334%. This is the title of that video, and so you can take a look at that as well. Okay. All right, so let's get back to the October 16 data. Okay, so let's take a look. Here it is. The options time and sales tape here. And what we detected was at the last 30 minutes here, you can see this, 3:27 p.m. Very, very unusual. These 20,280 contracts and this 10,140. These are all done at the same time. It's the same trader. It's a simultaneous trade here. Okay. So we can see that they sold the 42 strike calls, 20,000 of them, and here the 41 strike call. We believe they bought these calls, and what they were doing, we can see as we go into the option chain. This is what is going on here. The 42 strike calls, you can see that the volume here, those 20,000, open interest also about 21,000. And we have the 41 strike calls over here. 10,000 volume here, which is greater than the open interest here. So we know that the 41 strikes are opening trades. We believe they are rolling this 42 strike calls, closing them, selling them to close, and buying the 41 strike calls to open. Okay. And based on that, what the trade would look like would just be a 41 strike call option over here. And so you can see that this is a bullish trade here, because as the price on the x-axis goes up, this is the stock price on the x-axis, this becomes a profitable trade. We can see that the delta here is $32 or 32 positive. So that's bullish going long. Now, if in fact the 42 strike calls were being sold to open, this would be what the trade looks like. Okay. This would be the trade here. You can see that it's known as a back ratio. And essentially it is still bullish. You could see that as the price goes up, they're actually targeting this profit level by using this strategy. The profits are right here. This is their break even here. So they're profiting right here, this profit area here, because this is above the zero line here, which is the profit loss line. Anything above this, if this curve is above the zero, then that's profitable. If it's below, then it's a loss. You can see that by using this back ratio strategy, they are essentially mitigating and reducing potential losses. If this drops down, they will not be at a loss. And if it rallies, they'll be able to profit at this range here at expiration, which is the end of this week, October 20. You can see that the profits here is positive here. And the only way they would lose is if it rallies considerably past this break even, which is $43 here. Then they could potentially start to lose on this options trade. Okay. And so that's what they're thinking here. If they were selling that call option to open rather than to close. All right, so based on these two types of analysis, we think it is a bullish trade for United, and that is why we traded a bullish options strategy. So you can see here our positions right over here at the 41 strike call. What we did for each of our trades is that we sold 2 of the 41 strike calls. We bought 1 of the 42 strike calls, and then 1 of the 39 strike calls. Okay, and what happens is when you analyze this trade, so we're selling 2 for every of these trades, buying 1 for each trade. When we analyze it, you can see that this is our trade here. This is a butterfly strategy trade, broken wing butterfly. Cost about $64 for each trade. And we have this positive 15 delta. So it is bullish going long. We have a positive theta. And we have a negative vega, which is good for earnings trades since volatility or vega will decrease. So this is good for our trade. And as we move up here, if the stock rallies, you can see that our max profit is near that $41 at expiration, $134. And if it continues to go up, it will still be profitable. And so we will be able to also reduce our risk. If it drops, we will have time to cut our losses before it reaches max loss, which is the initial debit we paid, $64. So this is why we like this trade. And so if you are interested in how we trade on other stocks that have unusual options activity data that is a lot more accurate in predicting, because we prefer to follow trades done by very wealthy investors and traders in the millions, and especially not during earnings, because we found that earnings is a lot more risky in comparison to the trades that we typically do when we follow the rich traders. And so if you're interested in that data analysis that we do, where we share exclusive videos to our members, make sure to join our membership by clicking the join button on our channel homepage, and make sure to watch that video on this. We'll put that link here, and also this video where we made 300% on the trade. So that will be also available. So you can learn and understand how we do this type of analysis. And want to wish everybody a great day and good luck on this trade for United. Comment below on what you think will happen to United Airlines for earnings. Take care, everybody.